Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, 25th day of August 2020, and this is the Daily Report for Gold and Silver. We are coming to you a little bit early so we can prepare for the new subscriber workshop, which will take place at 7 o'clock Eastern Standard Time. This report will go out prior to that, and there will be a registration link on the members page today as well as yesterday. If you're a new subscriber, I hope we see you at the webinar. In any case, we did have some downside pressure in gold and silver today. In essence, we had positive forward movement in the United States and China trade talks. And we had a stock market that was once again going to new highs. Standard & Poor's hit a new all-time record high today. Those collectively took both gold and silver prices down a little bit. We'll talk about that when we look at our technical studies, but first to the price board. Although we are trading off the lows today, the lows coming in at $1,919, we are currently trading off about $10 at $1929.60, 70, and that, of course, is basis the most active December contract. Silver also under pressure. That is trading off by about 20 cents today, 26.40, and that's after reaching a low of 26.13 earlier this morning. We were aided today by slight dollar weakness, 93.08. putting it down about 0.2%. And when we look at the different ETFs we are involved in, 180.35, that is the GLD, the Gold Trust. We do have stops. Stops are sitting at 178.66, and we can see that our low today was 179.73, so we are safe there. And then lastly, to take a look at SLV or silver, we have a stop at 22.98. Low today came in at around 24.26. Let's take a look at our technical studies. Traders, there's no doubt, August has been very, very good to us in terms of our trade. We closed out our first trade on the 7th of August. We had a very nice profit. Our second trade we closed out on the 11th and then again on the 19th. Currently, we are flat. We got out of our last December long gold roughly at 1979 after entering at 1955, and that would have been on the 19th, because we saw a tremendous ability for there to be a sizable correction, or at least a decent correction in the market. That's what's kept us flat. Now, what I am noticing today, though, is that over the last, call it, week or so, and this is a very short-term chart, 240 minutes, we can see that this price point right around 1925 has been an excellent area of support. It has not been able to break through that really since about the 11th of this month, and that to me is significant. With the symposium being held on the 27th and 28th, that is going to be a virtual symposium. Traders are reluctant really to add or initiate positions at this point in gold. We're going to do the same thing. I want to see not only support in this market, and we are getting that, but I also want to see some sort of a pivot, meaning that we've got a clear candlestick pattern that indicates that we've got a key reversal. Until then, we will remain flat. However, I do want you to know what I'm looking at in terms of my upside projection short term. I'm looking for the next real surge to take us roughly to about $2,100 per ounce. We've been very close to that already, and I believe it could trade anywhere between 21 and 21.50 on the upside, and this being our short-term projection. For right now, I want to see how the symposium goes as it gets started later on this week. For right now, we will maintain our long positions in both SLV and GLD, and we are sidelined in gold and silver. Because traders, it is my belief that we could see continued U.S. dollar weakness, and that is going to be probably one of the key generators for higher gold pricing. We're looking at a split line chart. On the top, we're looking at a 2-week gold futures continuous contract dollar index on the bottom. Obviously, they will tend to move in a inverse or negative correlation. Here we've got the dollar going down. Here we've got gold going up. And we can see that at some points, the negative correlation is much more acute than other times. But nonetheless, I am looking for the dollar index to travel to as low as about 88. That is based upon these bottoms that came in at the beginning of 2018. And traders, as you know, recently we have been running our trades in tandem, meaning going long both gold and silver simultaneously. We're looking at a monthly chart. This is a big picture chart of silver so that we can see where there is some major resistance that obviously comes in at the 50% retracement, and that's about $30.50. We can see that a recent high that came in, and that of course was this month, came very, very close to that point. The next point we want to look at is the 61.8% retracement. That comes in at $26.05. We are definitively trading above that. As long as we can maintain that, I believe we will see the market consolidate at this new price point, because realize just recently it was just below $12. But traders, before we believe that we can enter a trade from the long side in either gold or silver, as I said, for gold, we've got to see that pivot. We're looking at a weekly chart, and we can see that we've had a series of lower highs. We've had pretty much equal lows over the last couple of weeks, but we need to see it hold above 2630 to 2650. If we can see that happen and see some sort of a candlestick pattern that indicates that pivot, we will send out a special trade alert to that effect. For right now, maintain your long positions in GLD as well as SLV. We are watching very carefully to see what happens in the economic symposium, specifically Chairman Powell's speech, because I think that that could possibly have a negative effect on the U.S. dollar, and that, of course, would result in a spike in both gold and silver pricing. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. And for those new subscribers, hope to see you at the workshop in just a few hours. Have a great day. Bye-bye.